Building your stock portfolio later in life, you're always thinking of ways to build cash flow quickly. However, reaching for those high-yield stocks or ETFs to speed up the process can be extremely dangerous. Everyone is talking about these high-yield weekly ETFs, but most people are actually scared about buying them. They say that the price will go down to zero. It's a trap. So I decided to stop wondering, and I'm going to go ahead and buy 1 share of TOPW with my own money inside my Roth IRA. Why TOPW? I need a strategy that fit a late start budget. The share price is accessible, $37.78, and the expense ratio is reasonable, 0.32% for a fund of this nature. It's diversified across solid stocks, and as I see here on Stock Unlock, it's currently showing a stronger total return than the S&P 500, which I know right now can just be a temporary thing.
Wait, what?
Okay, now there is one metric that I usually use when determining if I'm going to be adding an ETF to my stock portfolio, and that is the inception date. And I know that it hasn't been active for very long, September 4th, 2025. But I'm focusing on the current mechanics rather than the long-term track record that doesn't exist yet. And I'm only buying 1 share for this experiment. Let's be clear, this is a high-risk play. As a late start investor, I have to be savvy with my capital. I'm testing a strategy with a small amount of money to see if it survives. When it comes to ETFs like this that use a cover call strategy, there are 3 big concerns.
Concern number 1, NAV erosion. I've marked my buy-in, which is over $37. If the dividend comes in but the stock price drops faster than that payment, we are losing money. I'm tracking this gap every Friday. Number 2, sustainability. This yield is synthetic. It comes from selling options, not from business earnings. Watching this closely to see if this fund can actually earn these payouts, or if it's just returning my own capital back to me. Concern number 3, the late start plan. As someone starting late, I need my money to work fast, but I can't afford to go broke. I have a very specific exit plan if this goes south.
Okay, let's do this for real. I'm going to be opening up Robinhood to buy this share. So I'm in Robinhood, and right now I want you to see I do not have TOPW. I'm going to put here, pick stocks and ETFs. I'm going to put in TOPW. All right, I'm going to buy order. I'm going to buy shares, but I'm only buying 1 share. You can see it's $37.82. Review order and buy. And we're done. And there it is, TOPW. So this is about real money in a real account. Even Henry knows better than to just chase a high yield. He's a buy and hold guy. I'm taking the same approach to discipline.
Don't fall for the trap, Shell. Watch the trends.
You heard him. I am holding this for 4 weeks to track every payout, but I do have a metric that would be considered a red flag, and if I see this, I'm definitely exiting the plan. Let me show you. So now we're back in Stock Unlock, and I'll be looking at this graph to determine if I'm staying with it or if I'm exiting. And in a consecutive 3-month pattern, if we see that the TOPW price returns, which is the darker green, goes in a downward trajectory, and if the TOPW total returns, which is in the blue, either stays flat or also goes in a downward trajectory, then I'm out. So it's over 3 months. That helps because sometimes things just go up and down. Well, that 4 weeks is up, and so now let's jump into Stock Unlock and see how we're doing. Let's see if we are building steady cash flow or draining our account. Looking at our first check-in with TOPW from June 11th, things started off strong. Total returns were sitting at a massive 1,206.55%, and price returns were 811.75%. Moving into week 2, the momentum held up. On June 18th, we saw those total returns climb even higher to 1,233.77%, with price returns bumping up to 820.89%. At this point, the cash flow felt like a cheat code. But then we hit 3, and reality set in. From June 28th, we took a noticeable hit. Total returns dropped down to 1,158.57%, and price returns fell to 745.69%. This is exactly the NAV erosion concern that I was worried about from day one. When the share price drops faster than the yield pays out, we're going backwards, no matter how good that weekly dividend feels. Finally, looking at our most recent data from July 1st, there has been a slight recovery. Total returns crept back up to 1,200.61%, and price return sits at 787.73%. So what's the verdict? Volatility is real. We are building cash flow, but the underlying capital is definitely a roller coaster. What do you think, Henry?
I like my index funds slow, boring, and predictable. Chasing synthetic yield is a great way to lose your principal.
Henry is definitely a buy and hold kind of guy. He's not too impressed with these synthetic yields. So in taking that, wait a minute, that data was glitching and hiding the real story. And in fact, because the data was wrong, that's why this video took a little bit longer to put out. What happened is on Stock and Lock, because of circumstances, TOPW had two different companies' information put into the same graph. I'm not going to get into it all and stuff like that, but it just took a while for Stock and Lock to fix the problems, and so that way we get the real data. Now, looking at the historical data, you can see that TOPW did not have total returns over 1,200%. And in fact, their total returns right now is negative 1.84% as of July 17th, 2026. And their price returns plummeted to negative 33.63%. In fact, my exit plan was triggered before I even bought the share. Because of this now new information, this corrected information, I am immediately going to be exiting TOPW. And what I hope to share with you based off this experiment is that if it looks too good to be true, it probably is. And you know, I thought I had done my research enough, but I didn't. And I hope that you can learn that always do your due diligence. Take a few seconds to look at it. And you know what? I am so thankful that I did have concerns and I only bought one share. And when you are investing, you always want to invest on what you can possibly lose without putting you in a dire situation. If you are someone that's new to investing like me and you're trying to figure it out, you might be interested in watching this video called No More Decay, and it just shows you how you can invest in cover call ETFs and not worry about the NAV decay that does almost always follow it. And if you watch the very end, thank you so much. I really do appreciate it. Until next time, bye.